Hey everyone, welcome back to Corporate Decoder, the place where we take a peek behind the curtain of corporate filings and find out if companies are really living up to their hype. Today we are diving into Worksport Ltd, and this is not your typical meeting. So what exactly is this report all about? Well, it seems like Worksport Ltd had their annual meeting on the 11th of December 2025, and they are letting us know how everyone voted on some pretty important decisions. Think of it like the shareholder version of an election, and today we are going to look at the official results. If you're looking for straightforward analysis of corporate documents, make sure you're subscribed because we break down what these big companies are really saying. Also, join our Discord community linked in the description below. This is essentially a requirement for companies to inform the public about significant corporate events. So when a company has their big annual meeting where shareholders get to vote on important things, they have to report those results. It's all about transparency, folks. Alright, so the company we are looking at today is Worksport Ltd, and this report is mainly about what happened at their 2025 annual meeting of shareholders. This happened on the 11th of December 2025. Now, to understand the voting, it is important to know who holds the power. As of a specific date back in October 2025, the company had over 16.7 million shares of common stock and a small but powerful chunk of 100 shares of series of preferred stock. Here is the kicker though, holders of common stock get one vote. Per share, but the series of preferred stock, which is owned entirely by the CEO Stephen, Rossi carries a massive 51% of the total voting power. So even though it is a small number of shares, the CEO has a huge influence. For the meeting itself to even happen, and for any votes to be valid, they needed a quorum, which is like a minimum number of shareholders to be present. They had over 12.3 million shares represented, which is about 73.68% of all the common stock. So the meeting definitely had enough people there to make decisions. First up, the most fundamental part of any annual meeting, the election of the board of directors. They needed to elect 5 individuals to the board. Let's see how those votes panned out. For Stephen Rossi, the CEO, it is pretty straightforward. He got a whopping 9,675,695 votes in favour. That's a landslide. Lorenzo Rossi also received a very strong endorsement with 9,665,757 votes. 4. Craig Loverock followed suit with 9,646,154 votes in favour. William Carrigal also secured a solid majority with 9,647,425 votes for. And finally, Ned L. Siegel received 9,642,395 votes for. It looks like all 5 nominees they put up for election were overwhelmingly approved by the shareholders. This means the current leadership is set to continue guiding the company for another year. Next on the agenda is the ratification of their independent auditors Lumsden and McCormick LLP. This is basically shareholders giving a thumbs up to who is checking the company's financial books. And the shareholders gave them a massive seal of approval with 12,278,132 votes in favour. Only 70,426 voted against it, and 21,091 abstained. This clearly shows the shareholders trust the firm to do their job. Now this is where things get a little more interesting. They are asking shareholders to approve and ratify stock option grants that the board had already approved. This is often done to make sure these grants align with regulations like those from the Nasdaq stock market, which requires shareholder approval for certain equity issuances. Shareholders voted 9,430,486 in favour of these stock option grants. There were 268,847 votes against and 31,684 withheld. This indicates a strong majority support for these option grants, but with a noticeable number of votes against. It's worth keeping an eye on this as significant option grants can impact a company's stock price and dilute existing shareholder value if not managed carefully. This vote is about making some changes to their equity incentive plan. Specifically, they want to change how the plan replenishes itself. Currently, it increases annually, but they want it to increase quarterly. On top of that, they want to boost the percentage of shares available from 15 to 18%. The shareholders voted 9,158,974 in favour of these amendments. Against were 525,156 and 46,887 withheld their votes. This means a significant portion of shareholders are on board with increasing the frequency and the amount of equity available through this plan. This could be a move to better incentivize employees and executives by making equity awards more dynamic and potentially more valuable over time. And finally, this was a vote to approve adjourning the meeting. This typically happens when a company needs more time to get enough shareholder votes or to provide more information. Here, the shareholders overwhelmingly approved this with 11,893,967 votes in favour. only 263,718 voted against, and 211,964 abstained. This suggests that at the time of the meeting there was a need for more shareholder engagement, or perhaps to secure the necessary votes for certain proposals. It is a common tactic to ensure all aspects of the meeting are properly addressed. And that brings us to the official sign-off. Stephen Rossi, the Chief Executive Officer, has signed this report on behalf of Worksport Ltd, dated the 12th of December 2025. So what does all this tell us about Worksport Ltd? Well, the shareholder meeting results paint a picture of strong leadership confidence. The board members were elected by a substantial margin, and the choice of auditors was overwhelmingly ratified. This suggests that the current management team and their chosen partners have the backing of a significant portion of their shareholders. The approval of stock option grants and amendments to the equity incentive plan indicate a push towards potentially expanding equity compensation for employees. While this can be a positive for talent attraction and retention, it also means more shares will be issued, which could dilute the value of existing shares if the company's performance doesn't keep pace. The vote to adjourn also hints that there might have been some uncertainty or a need for further shareholder input, which is something to keep an eye on. Overall, Worksport Ltd seems to be navigating its shareholder relations with a clear mandate from its investors for continuity in leadership and confidence in its financial oversight. The strategic adjustments to their incentive plans will be crucial to watch as they unfold and impact shareholder value in the long run. Alright, that's our breakdown of Worksport Ltd's latest shareholder report. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.